Hey folks, Dan Frio here with your real estate update for December 9th, 2024. So let's get over to it. If you're new to my channel, what I do on a daily basis is I go over where mortgage rates are and then the whys behind what they're doing. Okay, in today's event, there's really no economic news. So I want to give you one little caption that I watched on CNBC actually last night after I posted yesterday's video, and it was kind of like a deja vu. They had a Wharton School president. He came in and kind of said, why we had a rally at the end of last year and then why we had a sell-off at the beginning of the year. It kind of matched what I was saying yesterday, kind of to a T. So without further ado, let's get over to that conversation, and then we'll get back to this, and I'll go over and explain to you where rates are and what I expect to happen in the next day or two. So let's get over to it. So the first thing we want to see is right through here. Let's check out this. I'll keep my mouth shut for about 2 or 3 minutes so you guys can understand what's going on in the background. So let's get over to it. Let's get it to CNBC. Take it away, Becky.
Is Jeremy Siegel. He's Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business. Professor Siegel, what do you think? Is the first week of this year a precursor of what to expect the rest of the year?
No, not necessarily. I mean, remember the huge run-up at the end of last year, a little bit of profit-taking. You don't want to take your capital gains in December to pay in 2023, rather take them in 2024. I'm still bullish here. In 2024, I don't think we're going to have the rise that we had in 2023, but I don't think there's as much difference. A lot of people are talking about the difference between Fed funds futures and what the dot plot is. Wall Street has all these calculations from the Fed funds futures, thinking that those are the expectations of the market. Well, we in finance know that actually they are downward biased numbers. In other words, it looks like there are 6 cuts. By the way, as a result of the rise in interest rates, there's now 5.5 cuts built in. But about 1.5 of those cuts is really what's called risk hedging. And that is, you want to buy those contracts. If something terrible happens, geopolitical risk, pandemic, a financial collapse, they will go way up. So they offset the risk on other assets. So as a result, people buy them. I estimate that there's really only about 4 cuts that are built in to the Fed funds futures. And we know the dot plot said 3. So really there isn't that much of a difference between the two right now. And secondly, and this is important, it's not so much we need those cuts. It's that Powell said, if there's going to be some slowdown, I'm ready to cut. That willingness to cut is more important than having the cuts. And I think that, we're not going to be as stubborn on the way down as we were in retrospect on the way up. And I think that that's the flexibility. Honestly, I would love the economy to keep on chugging along, and for them, if it chugs along at 5% Fed funds, that's not bad for stocks. So I think those two things, if you combine them, not much of a difference, not all that bad about if we don't have cuts in March or May. I think that profits are going to be good in 2024.
So he's talking about the stock market, but did you listen to what he said? He said we have some Fed rate cuts coming, and then he mentioned the dot plot. So without further ado, let's get over to what I do on a daily basis. So we're seeing right through here the top 6 programs people use when they're buying their first house. These are the interest rates out there. These are not my rates. These are not any individual bank's rates. What they are is Mortgage News Daily, right up through there. They survey lenders all over the country and ask them these questions, and there's 5 questions there. They said if you're buying a home and it's going to be your primary home and you're a first-time home buyer, that might be you. And then you have a 740 credit score putting 20% down. That's probably not you. So if that's not you, at the end of this video, I'll give you all my information so you can reach out to me. Let's figure out what your interest rate would be if you're out there looking to possibly buy in 2024. So without further ado, let's get over to the economic data. So we just went over that. He mentioned something in there that the Federal Reserve is going to reduce rates, and then he mentioned the dot plot. So let's get over to the dot plot. The reason why I'm doing this today, folks, is there's no economic news out. Now, tomorrow and Thursday and Friday, there's a lot of economic news when it comes to the employment numbers. numbers and inflation numbers. But today there's no news out there, so I figured I would show you this. So here's the dot plot. Basically what this is when the Federal Reserve meets, they do this 4 times a year. They all sit down there, and all members of the Fed sit there, and they put a dot right where they expect the federal funds rate to be. The federal funds rate is basically the interest rate that interbanks use. It's a short-term rate. Basically, it's this. If a bank at the end of the day is insolvent, let's say they have to have $1 billion in assets. So let's say at the end of the day they're short. What they have to do then, they have to borrow from another bank to make themselves solvent for the day. So the rate that they're charged on this is the federal funds rate. So what happens is when the bank's charges go up, they pass those charges on to us on short-term maturities, things like personal loans, car loans, credit card loans, okay, so forth. So this is what the dot plot is. This is the chart that the members sit there and they put a dot on where they expect the federal funds rate to be. Well, right here is where we are right now. We're at 5.25 to 5.5. Okay, so what they were saying is they're going to cut. How many cuts there's going to be, we don't know. Some people say 4, some people say 6. But if you saw on the video previously, they were saying that there's at least 4.5 cuts in here. So let me explain this. So in 2023, the federal funds rate ended at 5.25 to 5.5. All right. So now here's 2024. And again, this is from the Federal Reserve. These are members of the Fed putting dots on where they expect the federal funds rate to be. You can see a couple of them say that there's no cuts going to be there. One says that it's going to be cut maybe 1/4, and then you can start seeing all these others starting to fill in place. So even the Federal Reserve at this time really doesn't know where rates are going to be. So they're going to be data dependent. They're going to watch the inflation numbers and the jobs numbers. That's the most important numbers that they follow. They were actually created for 2 mandates. One was price stability, aka inflation, and the other one was full employment. Whatever the country's full employment is, that's what their goal is. So this is basically giving you all the context behind the scenes of what's going on. So the Federal Reserve is going to monitor this, but as you saw in the video previously, like I said, even the Federal Reserve is coming in saying they're going to cut rates, but it's going to be data dependent. Okay, so that's one of the biggest things I want you guys to see. And then just out, when is this? This was just out yesterday. Inflation expectations decline across all horizons. So even this is from the Federal Reserve Bank of New York. Even they're saying the inflation is coming down and down and down. That's what I need you guys to understand. Why did interest rates tick up so high? Well, the Federal Reserve came in and they kept increasing rates. And then also bond traders jumped in and they kind of took advantage of some of these situations because mortgage rates are actually tied to a bond. A lot of you guys don't know that out there. You think either banks create this rate or the Federal Reserve creates this rate, and that's not how that happens. So in today's video, what I wanted you guys to understand is the dynamics on what the dot plot is, how many times the Federal Reserve is proposed to actually reduce rates this year, and then also where the inflation front is. And this was out just yesterday, folks, from the Federal Reserve Bank of New York saying inflation is down across all measures. So we're seeing inflation coming down. Thus, the Federal Reserve at some point is going to pivot and start reducing rates. That's the expectations. How much they're going to do, we don't know at this point, but we're going to monitor this. So if you want to watch this on a daily basis, I'm going to give you the context of where rates are and basically the whys behind it. And then if you want to learn other aspects of the mortgage industry, the mortgage business, how do you apply for a loan? If you have questions in regards, if you're looking to buy a house, let me explain what I do and how I do things. So my name is Dan Frio. I do this video every day. I work at a federal bank that allows me to be licensed all throughout the country as well as Puerto Rico. I'm also one of the country's largest mortgage brokerages. What that means to you guys is this. You don't really have to shop around anymore to call, 5, 6, 7 banks, get pre-qualified, check every day to see where their rates are. Because by time, you check all these banks, by the time you find the best rate out there and you go back to that bank, rates probably change by that point. So what do we do? So basically we do this. If you want to check out me and my team, go to therateupdate.com. Okay, so here's what we provide you guys. If you're currently locked in at a rate right now, because remember back here, these are the top 6 programs people have. If you look over there a little bit briefly, or squint a little bit, you see the 52-week high and low. The 52-week high on interest rates was 8.03. Okay, so you might have locked in at that time, or you might have closed your loan at that time. What can you do? Are you stuck? Well, no. We'd love to help you in this scenario. So the first thing I want to talk to you guys out there is for those out there that are locked in, that are locked in at a higher rate than they're seeing today on my rate sheets. Okay, if you're out there, what I want you to do is upload your loan estimate right there. We created this tab not too long ago to help you guys figure out, with one click of the button, you're going to upload your loan estimate into this system and give me just a little bit of details. I'm going to go out there and search with up to 70 different companies to see what kind of rate and fees we can get you. In most cases, we're getting you a lower rate, lower fees, and all the above. So we're getting you both of those in most cases. Kyle Seagraves and I, we're going to come out with, in tomorrow's live event, we're going to show you how many loan estimates we've been getting in and what the average savings is per person. So maybe you're out there now, though, and you're like, hey, I don't know if I can qualify to buy this house. Is my income good enough? Do I make enough money? Is my credit scores in line to what I need to qualify? Do I have enough down payment? What I ask you guys to do is don't disqualify yourself. So many people look in there and they're like, I just can't do it. I'm just going to continue to rent. If you're really looking to buy in 2024, we'd love to help you out. 2 ways to get in touch with us, actually 3 ways to get in touch with us. One is the Apply Now button right over there. It's a little bit unique. What you're going to do is click that and give us a little bit of feedback about yourself. When you're looking to buy, what price ranges you're looking to buy in, and what your credit scores are. Based on that little bit of data that we're going to get, we're going to assign you to a mortgage specialist that specializes in that loan. What you can do is you can reach out to me personally, and how you do that is you go down through, you scroll down through here, and you're going to see all kind of blogs and mortgage calculating tools and so forth. At the bottom of this video or the website, you're going to see 2 things: our 800 number, which is right there, and my email address. This is my email address. I will be the one replying to you, and most of the times when I reply, I do it in video form, just like this, answering any questions that you guys have, and I love your commentary. So that is it for today. Here's where rates are. The MBS markets right now, I'll give you a little bit of insight in there. We have the MBS market based on the data that we have so far today. It's doing this. Let me explain to you how this works. So what this is a mortgage bond. The yield on this bond is the biggest component of your mortgage rate. So you're not looking to follow, the 10-year Treasury, or you don't follow just a bank to see where the rates are. If you really want to know what's going on with interest rates or mortgages, you're going to follow a mortgage-backed security. Let me explain to you briefly how this works. Here's the price of that bond. Okay, this is what's happening. So it's down 5 ticks. Okay, what all you need to know in this is if the bond price, as you see today, if it's going down, the price is going down, means rates are going up. Well, look where we were. Remember, we just looked at this. Rates were just 8% about 2 months ago. Well, let's see where that mortgage bond is. Let's see if this correlates together. Remember, about 2 months ago, right through here, rates were 8%. What have they done so far? Rally, 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 all the way up to here. That's what's causing rates to go from 8% all the way down to 6.74%, which is a 1.25% drop in just 60 days. Amazing. So if you want assistance from me or my team, please reach out to us. We would love to help. Otherwise, all I need you to do is, if you're interested in possibly buying a house this year, follow my channel. It's the best way to follow this, because I give you analyses on what home prices are doing, what mortgage programs are out there, and we follow daily on what in the heck is going on with mortgage rates. So my name is Dan Frio. Please, if you like my video, don't forget to subscribe down below. Thanks so much for watching. See you tomorrow. Bye-bye.